Hi, everyone. Really looking forward to this conversation with the World Bank on climate bonds and their approach. I'm really excited to have Heike and Scott with us today. Heike is the head of investor relations and sustainable finance at the World Bank, and Scott is working as a senior financial officer. And they're going to give us a really interesting presentation on the work that they do. And we're doing these series of interviews and conversations as part of our sustainable finance toolkit. And this is an effort to provide our network of students around the world an opportunity to learn more about sustainable finance, get access to the many different resources and platforms that are out there, and then be aware of who are the main actors and what are the organizations that they need to be involved with. And so Heike and Scott, so you know, Oikos International is a student-run organization with about 50 chapters around the globe. As you'll see from our participants, they're all over the world right now, which we think is a really great opportunity because we connect students who are interested in developing sustainability in their local campuses and are working on transforming education. So the Oikos International brand gives the students the abilities and skills, connecting them with many change agents and leaders around the globe, and then helping them work on their projects on their campuses. So we have students from all levels, from PhD to undergrad, participating in our programs. And so sustainable finance obviously is a very hot topic now, with many individuals wanting to get involved, figuring out how do they start learning about this and then applying it to the work that they do. Because we are cross-sectional, we will have participants on this call from many different fields. So we'll have a breadth of knowledge, but I am seeing that a couple of people on the call are actively participating and working in the field. So I think we'll have a big, a wide range of questions to you on the topic. So I don't think you need to simplify your language, but there may be some points where it would be helpful to sort of clarify exactly what you mean for people on the call. And this is supposed to be an interactive call, and we'll have time for that at the end. So Heike, if there is questions, maybe we can have some clarifying questions now and then a deeper discussion at the end. Yeah.
Okay, that sounds good.
Yeah.
Thank you.
Thank you so much. Yeah, why don't you take it away?
Yeah, so thanks for inviting us. I think that's a great way to handle this. So as we go through our slides, that we're just going to use them to guide our talk. If there's something that you don't that you think we could clarify, please just interrupt us, and then we'll have a discussion after that. So as you mentioned, so Scott and I work for the World Bank. We are in the World Bank Treasury. So the World Bank is a big organization. We're based in Washington, D.C., and we work with investors because the World Bank's projects are financed by the issuance of bonds in the capital markets. So we raise money from investors, and then we use that money for our activities in developing countries and emerging markets. And we have a slide deck, so maybe I can just pull that up and share my screen. That we prepared, as I said, to guide our talk. So you should be able to see that. I have a lot of things open, but I hope I picked the right one. Yeah,
I can see it. Yeah.
All right. Scott and I work, as I said, with investors, and something really exciting that we have been working on and we've been part of from the beginning is the green bond, or I would say the labeled bond market. And so we've called the presentation sort of evolution from green to sustainable bond market. And we wanted to start by explaining to you a little bit about what the World Bank does first. So most people have heard a lot about the World Bank, but it's good to sort of just lay things out. And then we have a lot of slides on funding, and then about the labeled bond market and sort of our thoughts on the future. But we are going to spend a lot of time for the beginning part, so talking about the World Bank, and then we'll take it from there. So maybe moving to building sustainable capital markets. And I just want to put in context what we do. We're a global development organization, and we are basically, you can think of us as like a platform for sustainable finance. We are mandated to achieve impact. We have twin goals, so everything that we finance is guided by those twin goals, and every single project or every program is financed or supported because of the positive impact it's intended to achieve. And I explained that we issue bonds in the capital markets to finance this sustainable development. And our bonds have a label of green bonds or sustainable development bonds. And that helps articulate to investors what our focus is. And we don't only provide financing to our member countries, we also provide technical advisory to public sector issuers, so to governments who are looking themselves to issue bonds with labels. And you'll hear us talking a lot about transparency, because that's really what makes these bonds different. It's transparency around how proceeds are being used. And we also talk a lot to investors because they are also moving with their own approaches and strategies to look at how their funds can support transparency and positive impact. So when we talk about building sustainable capital markets, it's all those elements. Now, I mentioned that I was going to say a little bit more about the World Bank, and it's helpful if you guys nod to show me like how much you know about the World Bank. So I think probably a lot of people have heard about the World Bank. We're based in Washington, D.C. You can see a picture of our headquarters there. We have our shareholders are countries. So we're owned by governments, and they become members of the World Bank. And our owners are also our clients. The countries that we lend to are our members. So it's like a development cooperative, you can think of it that way. And our twin goals are, and I mentioned that everything we do is focused around these twin goals, is to end extreme poverty and boost shared prosperity. So that second goal addresses the inequality in member countries. So our goals are actually social goals. You'll be hearing us talk a lot about climate, and that's because climate is so critical to achieving these social goals. And our goals are aligned with the Sustainable Development Goals that you may be familiar with. I mentioned that we're based in Washington, D.C. There's about 12,000 people who work for the World Bank in offices all around the world. And our largest shareholders are the US, Japan, and China, and then followed by Germany, UK, France, and other countries. And when we refer to World Bank, we are always talking about IBRD, which is the original member of the World Bank Group that has a AAA credit rating. And every time I press arrow down, it goes to the beginning, has a AAA credit rating based on our balance sheet. So the IBRD, International Bank for Reconstruction and Development, is part of the World Bank Group, which is well, a group of these entities that you see here. And the issuer of World Bank bonds is IBRD. That's the official name for that entity and the original entity of the World Bank Group. But there are also others. And you can see that there's two that are highlighted in blue here. So those are the two that we represent. So we're the treasury that works with investors in the capital markets to help raise financing for IBRD and for IDA. And the difference between the two organizations is basically which group of countries they serve. And that determines their financial structure and the types of products that they use. So IBRD was set up and after World War II, and its focus is to lend or provide other financial products to middle-income countries. IDA, International Development Association, was initially set up as a fund but recently also changed its financial structure so that it can issue bonds in the capital markets. And IDA focuses on lower income countries. So both of them work with governments, but IBRD with middle income countries and IDA with lower income countries. So of course, depending on who they work with, the products that they offer are going to be different, and also how they finance them. So IDA provides loans, but some of them are 0% loans with very long repayment periods, or grants. So they will also work with countries and provide grants, so money that they don't have to repay. Then there's other members in the World Bank Group. IFC, for example, also issues bonds and works with the private sector. And then there's other organizations, but they aren't active in the capital markets. But as I said, Scott and I, we are in the treasury of the World Bank, which is raising funds for IBRD and IDA in the capital markets. Should I pause and see if there are any clarification questions? It's really hard for me to know, like you said, people from different sectors, like, do you know what credit ratings are? Do you know what bonds are? Any questions around that?
Yeah, I think it would be helpful to pause from time to time. And if anyone does have any questions, please use the raise hand function. I think that'll be helpful if something comes up. A clarifying question that I might have is, I wasn't aware of the last two, the MIGA and the ICISID. And maybe just for some context, why do we need to have the Treasury separated from these other entities that make up the World Bank Group?
Okay, so and that actually can remind me to be a little bit more specific. So these are all legally separate entities, and the World Bank Group is not like a holding company. It's a group of organizations with countries as shareholders, slightly different, like not all shareholders who are shareholders of IBRD are also shareholders for the other organizations. They all serve a different purpose, with the overall goals being the twin goals that I mentioned. So they work towards those twin goals in different ways. IBRD and IDA lend and provide financial products to governments. IFC has a role in the private sector. So IFC has a separate balance sheet, and they work with the private sector, which is also very important. And of course, there's collaboration. MIGA is the Multilateral Investment Guarantee Agency. So they provide guarantees to support direct investment in developing countries, because sometimes guarantees are what's helpful to support development. And then ICSID is the International Center for the Settlement of Investment Disputes. And they, I guess the name kind of says what they do. And don't, like I said, don't raise the funds in the capital markets. So they have different roles. Now IFC has its own treasury because it has its own balance sheet and it works with the private sector. But the treasury that we represent and IBRD and IDA are similar in the way that they connect with governments, but they also share staff. So when IDA was set up, it was set up as a fund, and then it grew larger and larger until it had so much capital from the replenishments from donors that they do every 3 years, that IDA realized it could leverage that and issue bonds in the capital markets. So IBRD and IDA share staff, but they don't share balance sheets. And the World Bank Group isn't like a holding company. There's no cross guarantees, but there is a lot of collaboration, I would say, among I would say more the four. And IBRD and IDA share staff and a treasury, but are legally separate. Does that help? Scott, do you want to add anything? You can also just let me know when you want to add. No, okay.
I mean, that's fine. Nothing to add there.
Okay.
Yeah, I think that's really, really helpful. And then the last clarifying point was on the shareholders. And so how does that sort of arrangement works? And I'm a little bit aware of this, but I think that might be helpful to others on the call as well.
Okay, so I mentioned that who the largest shareholders were of IBRD, And when when shareholders become members of the World Bank, they pay in a certain amount of capital. And in the case of IBRD, the rest is so-called callable, and we have a slide on that later that I can talk about. And for IDA, like I said, there's these replenishments every 3 years. So that's how IDA funds itself primarily, but it has also complemented that funding through the issuance of bonds. And the shareholders, they represent their country constituents on the board. There's 24, we call them executive directors, represented on the board, and they approve everything. So every project actually goes to the board, or program of projects, and they discuss or management proposes the projects. There's guidelines on how things are presented, and there's a framework that has to be followed for every project, and the board approves that. And as I mentioned, the shareholders are, well, 189 countries. Some of them are borrowing member shareholders. Some borrow only from IBRD, some borrow only from IDA. There are a few that can get financing from both, and some of them do not borrow. So who borrows from IBRD and IDA depends on the per capita income. And countries like the United States or European countries, their per capita income is too high, so they're not eligible to borrow from IBRD or IDA, but they're, very important as shareholders and help determine how things are run. That help?
Yeah, very much so. Thank you, Heike.
Okay. So I mentioned that our projects are designed for the positive impact. And this slide here shows what we call our project life cycle. So when we work with countries, we design we call it a country partnership framework. You can think of it as a business plan with the government. So let's say a new government comes into power in a country. They will work with the World Bank and with other similar organizations about how we can support their goals. So let's say a government comes into power and they want to focus on jobs, climate, and health and education. So then we will work with them in those different areas and help them to achieve whatever goals they're trying to achieve. We work with them over many years, and I try to identify, priorities, and work with, oftentimes it's about systems. So working with health systems, education systems, or transportation systems that help meet those goals. And we have what's called an environmental and social framework, which guides our work. And like I said, every single project is designed to achieve a positive impact. Maybe it would be helpful if I just mention a project example. And this one here has a video that you can watch. It's a little bit dated, but the way we work with countries is similar. And it's actually a video that I made with a colleague when we went to visit this project in Colombia. So this was a huge transportation system change in Colombia, where the World Bank worked in different major cities of Colombia to introduce a bus rapid transport system. And you can imagine that kind of like a metro system that's above ground. And if you watch the video, you can see that previously the transportation system was very chaotic, and there were a lot of traffic fatalities. And so we worked with the government and designed these projects in different cities, and tried to achieve the various goals. Partly it was reducing emission reductions, it was reducing traffic fatalities, it was making sure that people from the rural areas had access to jobs in the city. There's many things that had to be considered, like gender specific points, like making sure that if women were working in jobs in the city, that they could, that the buses were stroller friendly, and things like that. So there were several very large projects that in some places also transform sort of the city, well, the city infrastructure, but also like put in place the bus terminals and so forth. So it's a good project, and it shows sort of how we work on big projects in countries with different goals. Now I think I'm going to pass on to Scott. I'm always nervous when he puts his camera off. I think he's still available to talk a little bit about how we are currently, the World Bank is currently being called to help our member countries with overlapping crises.
Thanks. Yeah, thanks. Hi, I'm Scott. I work with Heike in the Treasury. So thanks for the opportunity to share with you a little bit about what we do. You might be asking yourself, okay, so the country gets to, we work with the country to make these priorities that Heike said, and they might be healthcare or jobs or what have you. But of course, at the moment, countries are facing, these series of overlapping crises. So how do we direct the financing to where it's needed most? And we see tremendous need. Obviously with the COVID pandemic, the initial need was for financing to buy, equipment and eventually vaccines. We've seen the war in Ukraine leading to a tremendous rise in commodity prices. We all know about inflation. And then there in the background, you have climate. So we try and address countries' needs to make sure that they have the financing, to support their people. So while the CPF or the country partnership framework guides the overall strategy, there is flexibility to sort of make these more targeted investments when needed, but while also not losing sight of the long-term development priorities. We're in the business of helping countries help their people move forward. And so you can't look at the long term if the immediate isn't addressed. So, we have an emergency loan to Turkey to respond to the earthquake, for example, is something that we do to step in because we're helping Turkey with their long-term economic development goals, but we need to help address their short-term goals or short-term needs. So these are just some of the things. None of this is a surprise to you, I'm sure, but some of the topics that we're very focused on. Other areas on the next slide, Heike, if you can move the slide to 9. These are the range of focus areas that we lend for. And again, it's directed by the country. It's country owned and country driven. That's part of what makes the whole institution work, is that the country, the World Bank isn't coming and then just making a loan for something that the country doesn't want. That's not a recipe for success. So we target based on what the country needs. So these are this sort of the range. And then I do want to talk a little bit on the next slide about climate specifically. And we'll talk about this more when we talk about the labeled bonds and how we arrive to sustainable development bonds and green versus social bonds and so forth. But just to give you the overview, is that the World Bank, as Heike said, has the social mission. Our mission is economic development. It's helping people reduce inequality. But you can't do that without addressing climate. And so climate is what we call mainstreamed or integrated into every single project. So when we're doing a health project, we're thinking about climate change. Or if we're doing an education project, we're thinking about what are the kids learning? Are they learning, if they're in a primary school, are they learning about climate science? If they're in secondary school or post-secondary school, are they learning skills for green jobs? Are they learning how to repair windmills, for example? And so this integrated approach is something that we've applied to our own projects. And then we're also applying it when we're talking with our member governments. So as you could imagine, we're making these big financial investments, as Heike gave the example of the bus rapid transit, or we're making investments in infrastructure and in technology and education. We have a dialogue with the country, and we're promoting trying to think of a better word than promoting, but we're encouraging governments to take a whole of economy approach to climate, not just have climate projects in one little box of their portfolio of things that they're making investments for, how they're thinking about climate change, but really to integrate climate into all aspects of their economy. We call it the whole of economy approach. So that's what this slide is talking about, and we've done that ourselves in terms of how we lend, but we're now in taking it further to encourage countries to sort of put climate at the center. Doesn't mean that every single dollar that a government spends has to be about climate change, but always think about climate. Is the infrastructure in a floodplain? Is it vulnerable to sea level rise? Is there a choice that can bring a more low carbon solution? So this is something that's very much ingrained in how we're working with our member governments. Heike, do you want to take the original green bond story on slide 11? Or do you want to stop there?
Well, maybe we can stop. Are there any questions to this whole of economy approach or mainstreaming climate?
It has been an evolution. I didn't talk about that timeline, but we didn't just come to this from nothing. It has been evolution. The World Bank's been thinking about climate and how best to integrate climate for a long time, and this is sort of where we've landed at the moment.
All right. Okay, let me continue. So how many of you have heard of green bonds? Okay, good. So I was very much involved with the very first green bond that was designed, over 15 years ago now. And this slide kind of describes this sort of original green bond story. And we were approached by a Swedish bank, SEB, that you see there in green, because they were working with some pension funds, some Swedish pension funds or Scandinavian pension funds who were concerned about climate change and also looking for ways that they could support activities that address climate change as part of their investments. So they had diversified portfolios with equity, public equity, private equity, but also fixed income, which are bonds. And they knew that the World Bank was supporting projects that have a positive impact on climate or help countries with adaptations, help countries adapt to climate change, and wanted to see if we could design a financial product that helped them sort of direct their funds to certain projects, because they didn't have the expertise to choose projects. And in the discussions with them, it also turned out they wanted a liquid product, which means a product that they could easily sell in the markets. And they wanted the product to be AAA. They didn't want to take a specific project risk or specific country risk. So that's why approaching the World Bank worked for them. They wanted a product that basically benefited from the World Bank's overall setup that we described to you. We work with countries, we choose the projects, but our bonds that we issue are rated AAA. So we worked with them, and the product that we came up with is basically it's the same. It's a World Bank bond. So they take World Bank risk. They don't take project risk. They don't take country risk. So it has the same credit rating. But what's different is the additional impact reporting. So there's a closer connection between them and what our projects achieve, because we're explaining to them how we are allocating an equivalent amount of the money that we raise from them to projects. It's not project finance. So we're not raising money from the investors and then using that specific money for, let's say, a transportation efficiency project like the one that I described to you, because money is fungible. But what we are doing is we're telling the investors, we're raising funds from you. Yes, it's going into a pool, but we are reporting to you about how equivalent amounts have been supporting eligible projects. And over here in the photos, you can see the types of eligible projects that we determined. So one was energy efficiency or renewable energy projects, also waste management. And then something that's very important is also adaptation. And over the years, adaptation has taken on a bigger and bigger role because we can see the effects that climate is having in our member countries with flooding, droughts. So working with them on adaptation projects has become more and more important. And you can see the investors. I mean, first it was just Scandinavian investors, Swedish investors, and just SEB, but then it expanded to investors all around the world and also other banks. And that product has been the model for all green bonds in the market and other labeled bonds. And we'll talk a little bit about that later on. Any questions?
I think it's useful just to reiterate, in a green bond and a labeled bond, the investor is not taking specific project risk. They're not being compensated if a specific green project fails or doesn't fail. If the World Bank invests in a solar project and the project fails to deliver electricity the way it's supposed to, the green bond investor gets paid the same return, the same coupon, irrespective of any particular project. They take the overall issuer. That's true in the case of the World Bank, but that's true with every green bond. The buyer of the bond is just taking the risk that the issuer is going to pay them back, and the issuer is just committing to show through reporting how an equivalent amount of their funding is and where it's going. So it's really about risk, and Heike said it's about liquidity, or which is tradability. The investors want a product, the green bond product, that they can trade. And if the bond was a project bond and it had connection to a specific project, it wouldn't have the same sort of fungibility, the same sort of liquidity, and it would come with much different risk. And the investor would understand much more about specific projects. So I just wanted to reiterate that. I know you said that, Heike, but this is the key point I want to make sure to get across.
No, that's helpful. And when we say project risk, there's different types of project risk. One is the project performance, so like what it achieves, and the other is project credit risk. So I was focusing more on the project credit risk, but I'm glad that Scott brought in this other thing, which is actually going to be relevant for one of the products we're going to explain later too. So that's project performance risk, achieving the KPIs, the key performance indicators of projects.
I thought that was really helpful to explain in a different way, Scott. And Heike, the way you explained it, I understood, because this is like the crux of green projects here, is like, how do we demonstrate that impact is actually happening, and where is the there's like a discussion, right? Where do green bonds really fit in developing sustainable and advancing projects that are going to address climate change? Is this project going to move this forward or not? The person investing it is so far removed from that equation. So there's a profile of the investors in green bonds that's quite different than an impact investor, for example.
Correct. And we're rated AAA, and what the investors that we were developing this with wanted was this tradability of the product, and they're not taking the project risk. It's our responsibility that the projects go well, and that they achieve the intended goals, working with the government. But for the investor, they want the financial product and they want their money back, but they are interested in knowing how their funds are helping to support this. And I think that's really, this is what it transformed. And if you watch the video that's on the next page, it transformed the capital markets from investors focusing only on the financial characteristics and the return to also, it's like it has to be, you have to have the financials there, you have to have the credit, tradability and everything, the return, the terms, the maturity, the currency, but they also want to know, how are we helping achieve these things? And it's like it's a first step for them in doing more. And since then, I mentioned that it was 15 years, so much has changed in the capital markets. the discussions that we had with investors before green bonds, of course, we always talked about what the World Bank did, that we are, set up for impact, how we work with countries, but there was never a lot of interest in that. That has completely changed now. People really want to know about the projects. They want to know about, and these labels are helpful because they're an indication of what we do with, in the case of green, an equivalent amount. And later we'll talk about the label sustainable development bonds. And the reason we moved from, well, I would say that green was the starting point, and it's super helpful as a starting point. But for an organization like the World Bank, where our entire mandate is about impact, it was important for us to expand this to articulate our sustainable development mandate, and highlight also that we work in many different sectors, and mainstream, as Scott was saying, climate in all of them, in all our projects. All right, so let's move on. If you have time, it's just 10 minutes. You don't have to watch it now, but have any of you seen this video? It's really a good explanation of, we call it the green bond story. And I mean, it's a bit dated now. We did it at the 10-year anniversary of the green bond. So it's, yeah, gosh, almost 5 years old, but it helps you understand. We interviewed the original investors for green bonds, what they were looking for, that this doesn't exist in the market. And then it sort of ends with kind of the legacy of this is really the transparency and the reporting. And that's what we spent a lot of time on. I mentioned that we've expanded to sustainable development bonds, and I'm just going to pass on to Scott to take you through this slide that has checklists, because investors work with checklists.
Yeah, I mean, I think we've just talked through it, which is that we've broadened Heike to sort of articulate the more than just green that we do, is that green is integrated with this sustainable development label on our bonds. But as Heike said, a lot of investors look for certain things when buying our bonds, and so of course all of our projects support the sustainable development goals. Heike mentioned this very rigorous project cycle that starts with the country partnership framework, and all the projects get reviewed and approved by our board and so forth. We have very strong environmental and social standards, ENS standards. So those are things that govern child labor, forced resettlement, groundwater pollution. When we do projects, we have very strong standards that govern what or how projects can be implemented. And so all of this leads us to this articulation of sustainable development bonds, and all of our bonds, we market our bonds in the market. You'll find if you went to a Bloomberg terminal, which is what a lot of traders use to do market research, that all of our bonds have a little yellow sun, which is a symbol that Bloomberg has given to sustainability bonds. And then we're listed in Luxembourg on exchange for sustainable bonds. So this is very, as Heike said, it's in that you were asking at the very beginning, what's Heike's title? And sustainable finance, investor relations and sustainable finance. This is at the center of all of our conversations with investors. And then Heike, on the next slide, just to say, we don't just stop. Our mandate as a public institution is not just our own balance sheet, our own projects, but really to work in the establishment and promotion of sustainable capital markets. So we do research, we work with partners, we participate in international forum to provide our experience and share best practices, and as well as we host different workshops and different engagement with investors. So this is a big part of what we do is building sustainable capital markets, and I know the focus of this group. We like to engage, which is exactly why we're doing this right now, is that this is part of our mandate, is not only to be practitioners, but also to share our experience and share what we see in the market, what trends in the market that we've seen and see going forward. Heike will want to make a plug for our ESG data portal here, which you see in the bottom left. This is a really neat tool that investors and other market participants use to help them understand ESG risks when making investments in sovereign governments, when they buy bonds of a country, or to help them steer investments within a country to learn more about a country's risk and opportunities. They'll use World Bank data, things like GDP per capita, or number of household connections to the internet, or number of women that in schools. This is kind of data that the World Bank collects and makes public, and so this portal is just a way to go and search it and make sense of it. So I will.
Oops. We lost Scott. So he would urge you to look at that database. And the conversations that we have with investors are actually quite interesting, because they're all trying to look at a sustainable finance, and it depends why they're doing it. So are they looking for this positive impact? Are they looking to understand the environmental, social, and governance risks of their portfolios? Are they looking to see how the changing climate is affecting their holdings? So all the investors are kind of going through this exercise to figure out, why they care about this, why they care about sustainable finance, and then determine what strategy works most for them. So Scott's back.
Sorry, I hit the wrong button on my phone, and I meant to hang up on the call, and I hung up on you. Sorry, but I am back.
Okay, all right. So I was just trying to say that how we work with different investors who have different perspectives. And Stephen, you keep mentioning impact reporting. So, all investors would like to have the liquidity, the credit risk, and all that, but also that very specific impact. And of course, there's going to be trade-offs. All right, any questions? So all of this is pretty much a summary of what we wanted to say in totality, but we have two sections now that sort of drill down and talk. One section talks a little bit more about our funding and innovations, and then the other one about how we engage with investors. And then the other one is about sort of the labeled bond market that we've been talking about. So shall we go through them? Is there anything specific you want us to focus on more?
For me, I think it's very interesting to talk about the label and how it is connected to impact, and then thinking about how do we attract investors to work more towards developing impact, as this is a topic that many of our network would be very interested in, as like beyond just the financials of how are we using finance to make a better planet. So I think that is something that is interesting. I know there's others on the call, and I've been speaking a lot, so I just want to encourage questions and comments to come up as well, of like where you are interested in that. Yeah. Anyone else want to share some background on what they're interested in? Ellen, I see you just unmuted.
Yeah,
Go
for it, Chuck. I was looking for the raised hand. I couldn't find it. My name is Elena, and I'm joining from Brazil right now. And I tried to write my master's thesis on climate migration and catastrophe bonds, and tried to find a relation between the two, or at least how climate migration topics can be considered in catastrophe bonds. And I would love to hear more about them, if they are part of green bonds or sustainable development bonds within the World Bank, and how you would address migration topics, or if they are still very indirectly addressed through bonds. In general, like if you touch upon it, that would be awesome.
Okay, great. And Giacomo, were you going to ask something?
Yes, it was really interesting to me, the part on the risk of the green bonds issued by the World Bank. If I got it pretty well, Scott said that the risk is like brought to the minimum for the government that buys the bond, right? Like it's not the same risk for normal bonds, right? When you buy a green bond issued by the World Bank.
Okay, good. So that helps us to know what we can focus on. So I'm going to answer the questions just really quickly, and then we'll go through this, and especially on the climate. And Stephen, your point, like how we can bring investors more on impact. We have been working on designing some new products that do exactly that. So we can spend a little bit of time on that. But I'm going to start first with Giacomo's question about the risk. So the thing about green bonds is, or any labeled bonds, is that the investor is not taking on any sort of green risk or social risk. It's a bond. The main thing is that they're getting information about how their funds are helping to support those types of things that that bond is earmarked for. And we always talk about equivalent amounts. And if we go through some of the slides on the labeled bond section, that might become clearer. But the risk to the investor is the same, whether it depends on the issuer. So whether they buy, in the case of World Bank, all our bonds are labeled as sustainable development bonds. The financial risk to the investor is the same. For other organizations, they also issue sort of labeled bonds or non-labeled bonds. The financial risk to the investors will be the same. And Scott raised his real hand.
Well, I mean, a real hand. I mean, I think it's really good because everyone understands Apple, and you can read Apple's impact report where they send the proceeds of the Apple's green bond, talking about Apple iPhones and computers. So in their impact report, Apple issues a green bond, and they say that an equivalent amount of the funding from the bond went to support renewable energy solar panels on the top of their Apple stores, to make their Apple stores more green. But the bondholder, when you buy that Apple green bond, the likelihood that you're going to get paid back your return and make your return back is nothing to do with whether or not their Apple is successful in implementing that project to put the solar panels on the roof of their stores. You're buying something that the investment is connected to how well Apple does as a company. Are they able to sell iPhones? Are they able to sell computers or whatever they're selling? You're buying Apple. Your risk is to Apple. It's not to the project. It's not to what they're saying they're going to do with the equivalent amount. And so, you're getting information about how they're using an equivalent amount of your money, but you're not taking the risk of that being done. Now, maybe if they don't do it and they're not successful, you might not buy the next one, but you're not taking that risk. You're taking Apple risk.
Thank you very much. Yeah.
And on the climate migration and cat bonds, maybe we'll cover that when we go over those slides. Okay, so I'm just going to go over this part really quickly. I mentioned that IBRD issues bonds. We issue different types of bonds, including these so-called capital at risk notes, which would be the cat bonds. And the main reasons that investors buy our bonds are this safety, which is the AAA credit rating, the highest credit rating, liquidity, that they can buy and sell the bonds. And then we also have different currencies. And as you can see, sort of from year to year, how much we raise in the capital markets changes. Currently, it's about 40 to 45 billion. So just to give you a sense of the magnitude, and we issue hundreds of bonds and are in the market, almost every day, either with big bonds or smaller bonds. We've been responsible for many different innovations in the markets, of which green bond was one of them. I don't know if those of you who know finance, the World Bank did the very first currency swap in the markets, the very first global bond. So this is the bond that can be traded in all around the globe. And then there are a few others here. And one of the ones that we are going to be explaining later is the wildlife conservation bond, because this is a really interesting structure that helps really connect the investors more to project performance risk and to the impact, and take on more of that risk. So I mentioned this here. I keep talking about investors. This here shows example of the types of investor groups that buy our bonds, and they're very big institutional, as we call them, investors. So the treasuries of banks, of big commercial banks, central banks or official institutions that need this very high quality liquid aspect, and then also asset managers or pension funds or insurance companies. We also do sell bonds to retail, as we call them, so individuals in certain markets, like in Japan, where there's a culture for individuals or retail investors to buy bonds. But usually it goes to these, or almost all of them go to these institutional investors that pool funds from others. So this is the bond that I referenced, the wildlife conservation one, and I'll turn over to Scott so he can explain the financial structure, and then also sort of the very cool feature, which is this letting the investors actually take on some project implementation risk.
Yeah, so it's a great way to sort of juxtapose it with the green bond, with a labeled bond. So in this structure, which we did last March, investors took specific project risks. So it was a $150 million bond, a 5-year bond. So in a bond, investors on the first day, they give us $150 million. Typically, in exchange, we would give them an annual or semi-annual coupon interest, and then at maturity, we would give them back the $150 million. That's roughly how a normal bond works. For this structure, the investors, they gave up those interest payments or the coupons. They gave us $150 million on the first day. And then instead of giving them semi-annual coupons that they would, based on what we normally do, we took the money that we would have normally give them, and we transferred that to a series of 2 parks in South Africa to help implement policies and activities to increase the rhino population in the park, to anti-poaching activities and other biodiversity activities to help raise the level of black rhinos in these 2 parks. And then the investors at the end of the bond, in exchange for not receiving those normal interest payments that they normally would, they get a success payment at the end of the bond based on how on the population growth of the rhinos. And so there's an annual accounting of the rhinos, and the success payments are connected. The interest payments, the foregone interest payments, are connected to the growth of the rhinos. So for us, this is different than the green bond. This is not the money isn't pooled. Well, the $150 million of the bond is pooled with all the rest of the projects, like that bus rapid transit project that we showed you, and all the health projects that we've been talking about. All that gets pooled together and distributed to all the projects that we do around the world. But the coupon or the foregone interest is going directly to a specific project, and then the investor's return is dependent on that project. So it's a really neat structure. We call it outcome based. You could consider it impact a bond. Impact bond has a specific terminology which maybe you've come across. So we like to use outcome based bond, but this is really about direct impact for the investor.
So Stephen noted that the issue price is below par.
Excellent. So that allows, so there's many features, just like with the green bond. We're trying to devise a product in the bond market that is attractive to investors. Investors here are taking risks that they're not accustomed to taking. Investors, these are insurance companies or pension funds or asset managers. They're used to buying things, that have that make financial sense. And the growth of a rhino whether or not rhinoceroses have babies is just not something they're used to studying and being able to account for the risks. So one of the things that makes this bond more attractive is that, as I said, the $150 million goes into the World Bank's general lending pool. It's principal protected is the terminology, which means that whether the return of that $150 million is based on the credit of the World Bank. So it's very safe that they're going to get their $150 million. But by being issued below par means that investors don't pay in the they pay in, can't have a calculator in front of me, but they paid in less than $150 million on day one, and they'll get back $150 million. So they get a little bit of interest, or they get a little bit of return by buying the bond, because they gave less than $150 million on day one, and they'll get back $150 million after year 5. So they definitely get back some return. It's a little bit of attractive, even if the rhinos don't have any babies, they still get something. And then the amount of excess return, or they have a chance to make a pickup, a more attractive return based on how successful the project is.
And this is it's principal protected, so the investors will get back 100%. So they get this, they get a small coupon at the end of the lifetime of the bond. But in addition to that, they get what Scott was describing, this conservation success payment, and that depends on the rhino growth rate in the parks. Now, the type of investors that we speak to are the same ones. So the ones who bought this also buy, or could also buy, they're kind of in our group of potential investors. They're not the traditional, I would say, impact investors, but here they are actually taking on project impact risk. Now, this conservation success payment doesn't come from the World Bank, it comes from a donor, the Global Environment Facility, which is normally the one that would take this project success risk. And I mean, as you can tell, we love this product. The financial structure can be applied to other things as well. And earlier this week, we also issued we priced another bond that has that similar financial structure, but is different. Do you want to explain it, Scott?
Sure. It's using the same structure of taking the principal of the bond. The investors put in a certain amount of money. In this case, it was $50 million. And the money went to support the foregone interest of the coupons went to support a water purification project in Vietnam. The distribution of very inexpensive water purifiers to schools, and the project generates carbon credits because prior to the introduction of these water purifiers, these schools were burning wood, were burning biomass to clean their drinking water, boil their drinking water. And so that creates greenhouse gases. When we distribute these water purifiers, when the project company in Vietnam distributes the water purifiers, then there are no more greenhouse gases. So there's these carbon credits, which is another topic, which is separate from what we're talking about today. But anyway, these carbon credits, they have a value, and that value gets monetized, and then the investors in the bond get a return based on whether or not the project produces those carbon credits. Again, the investor is getting paid a return based on the success of the project. In the case of the rhino bond, the success is measured by the growth rate of the rhinos. And in the case of this new bond that we just issued, we just priced this week, the success is measured by the issuance of carbon credits. It's just a yardstick, a measurement tool to know that a project is making the impact that that it sets out to achieve. So this is a structure that we think has a lot of potential. It's different, again, than the green bond, but at the same time, it has a lot of similarities in that it's structured around what a lot of fixed income, bond investors, where there are $100 trillion of these bonds, not of these bonds that I'm talking about now, but of in general of bonds in the market. This is a huge liquid market. This is what keeps global finance moving. And so if we can, help jumpstart a way of structuring bonds that allows for these investors that typically buy bonds to participate in direct impact, it we think has a lot of potential.
So you can see we're kind of inching the investors, right? First, a product that's just the same from all characteristics, except they get more information, like more transparency through this label, to another type of product where it's principal protected. That's all they know. I guess slightly less liquid because it's smaller, but they're taking on sort of some sort of their exact return is not, they don't know that when they invest in it, because it depends on the success, the project success, the outcome of the project.
My follow-up question on this, Scott and Heike, was with the Rhino bond, you're working with a third party that's helping to guarantee or pay for this, like this compensation for success. Is in this water purification, is there a third party that works with you on the implementation of this project? And are they the ones that are helping with this success payment, or is that going to be something different?
Yeah, absolutely. So in the Rhino, you have like the parks, the park rangers and so forth, like delivering making the investments and delivering the impact on the ground. And the water purifiers, there's a third party. There's a company in Vietnam that has a history and experience of manufacturing and distributing the water purifiers, and they have a project already registered with the carbon market registration, Vera. If you're in that space, that the name will sound familiar. And they're the ones that are distributing and implementing the project. They're selling the carbon credits, or an amount of carbon credits from the project, not all of them, but a certain amount of the carbon credits to Citibank, which is sitting in between the structure between the World Bank and the bond and the project in Vietnam. So the project developer sells carbon credits to Citibank, and then Citibank then transfers the money from the sale back to us, and then we give it to the bondholders. There's a neat infographic that took us about 25 different versions before we finally got it right, but we can put that in the chat. Or follow up later with that, how that structure works. But basically, yes, you have Citibank in the middle, monetizing the carbon credits, and then you have the project developer on the ground actually implementing the project.
All right, should we talk about the cat bonds? Okay, so this is it's a different type of product, different type of investors. This is a capital at risk note, and I'll let Scott explain that.
Yeah, so in a capital at risk note, investors are taking it's different. Again, another structure, but related. Investors are putting their principal at risk, meaning that if a certain event happens, they will lose their principal. So if they buy $150 million bond, as in the case of this Jamaica cat bond, no, sorry, it's 185 million. Sorry, got 150 on my mind. $185 million bond. They have the potential to lose all 185 with a normal World Bank bond, with the labeled green bond. Typically, as we mentioned, the principal is not at risk. I mean, you're taking the World Bank's credit risk. Here, they're taking the risk of their principal being wiped out. And in exchange, they get a much higher return. And the trigger for what might cause their principal to be wiped out would, in this case, here in Jamaica, is a tropical cyclone. And hurricanes, and it's all done based on certain barometric pressure and wind speed, but there's a certain trigger in the terms of the bond that would indicate if the bond is triggered and the investors would lose their lose their principal. We also do catastrophe bonds for other natural disasters like earthquakes as well. We've done a pandemic bond as well. So the idea is that we're transferring risk to capital market bond investors. It's not that dissimilar from insurance or reinsurance that a country like Jamaica could get on the market by going to a reinsurance company to take these risks and pay for it. But by structuring it through a bond, we're able to bring a different set of well, we bring investors, we bring capital markets investors that buy bonds, pension funds, insurance companies, and asset managers like these types of bonds. They tend to be pretty specialized buyers, but they like these types of bonds because they're uncorrelated risks. Whether or not a hurricane hits Jamaica has really nothing to do whether the S&P 500 in the U.S. it goes up or down, whereas a lot of other risks that investors take are correlated, interest rates and currencies and so forth. These are uncorrelated risks. So it helps countries manage their the fallout of a natural disaster because if there's a payout, if the bond is triggered, all of the funds then flow. The principal then flows to the country. I think I failed to say that at the beginning, so apologies. But the point of the structure is to provide insurance to the country. So if the natural disaster happens, then in this case, the $185 million would flow to Jamaica and help Jamaica recover from the bond. It's part of their overall fiscal disaster risk management. It's how Jamaica is overall thinking about responding to natural disasters to make sure they have money on hand in the case of a natural disaster. You can imagine a country like Jamaica, if a hurricane hits, not only are there immediate impacts like they need shelter, food, water, medicine, but it's likely that a large part of their economy is going to be hit because tourism makes up such a big part of a country like Jamaica's economy. So they need to think about having the access to financing to help put their country back in order. So this is a package that we come part of a larger package that we come to the Ministry of Finance in a country like Jamaica.
So as Scott said, this is part of the disaster risk management strategy of a country. And Elena, you were asking specifically about climate migration. I mean, I'm not an expert there, but I would think that so if a disaster would hit and it triggers the cat bond, then the government gets funding that they can then use to address the effects of the disaster. And climate migration is something that also, I mean, happens over time, right? There's like one disaster, there's another disaster, there's flooding, and then countries just or communities don't rebuild and people just move. So I do think that there's ways that you could connect the two. But yeah, Scott, do you want to comment on that in any way?
Yeah, I mean, you're happy to have a chat on that. Another time. Feel free to reach out. I think you'll see my name on the my email address on the invitation. But my initial reaction to that is that these catastrophe bonds, you have to be a country or that has a relatively sophisticated capital market presence to be able to issue your own or even to work through us. We offer these bonds ourselves, so on behalf of countries, but countries that face the largest climate migration challenges are often the countries that have the least access to capital markets, the least ability to issue their own bonds, or these same thing happens, by the way, on green bonds too, and labeled bonds. You can't issue a green bond until you can issue a bond, and a lot of the countries that face the largest climate migration challenges wouldn't have the balance sheet to offer have a challenge to issue any bond, let alone a green bond. So the same thing here is such a challenge in the climate migration space is that the countries right at the forefront or right on the front lines are not necessarily the most well equipped in terms of financial products. But certainly this has catastrophe bonds can play a role in helping countries with their overall disaster risk management and have the money they need to respond both for the short and long term.
Thank you so much for speaking to that question so extensively also. I also spotted Swiss Re as a lead on the slide. So is this connected, this catastrophe bond connected directly to the reinsurance market as an addition to it, a reinsurance of a country, or is it basically part of the same disaster risk management plan? Or how are they two connected here?
Do you want me to start, Scott, and then you add?
Sure, go ahead.
So, I mean, I mentioned that the players are different here. So the underwriters or the lead managers for the other bonds that we were talking about are the ones that we normally deal with. But here it's a very different market. The investors are different. It's, you see 66% goes to these insurance linked security funds, and the lead managers are these reinsurance companies. So they have a different way to underwrite the risk and to distribute the risk. It takes a different expertise, I would say, for them to model and price these types of products. I don't see Scott. You're still there, yes, Scott.
Yeah, I'm here. I switched to my a different mode of connecting, but I'm here. I am gonna have to drop off pretty soon though.
Okay. All right, so should we go on, move on? Any other questions to these types of products? All right, I'm going to go over the labeled bond market. We've talked about it a lot. So I mentioned the first green bond that we issued, and here on the left you can see that over time the types of issuers that were issuing these labeled bonds, and the labels are normally green, social, or sustainability. There are some other labels, but usually they're part of those categories, has risen. There was less issuance in the market overall in 2022. So the fact that it went down isn't necessarily a reflection of less labeled bonds. In percentage of the market, it was quite similar. You can see on the right hand side that most of the products continue to be green as a label, but there are also the others. And our bonds are we're the largest sustainability bond issuer, and basically sustainability bonds in the definition of the market support green and social aspects. And we've talked about the key features. I described that when I was talking about the first labeled bond. The financial characteristics are similar, but they're designed to support certain positive impacts with equivalent amounts of the issued bonds. There's the International Capital Markets Association we worked with them and with others in the market to help articulate guidelines that were published that really help other issuers and investors that are interested in this market. And we're part of the executive committee that's coordinated by the International Capital Market Association, and there's a whole host of information that they have on their website to help guide this market in a practical way. Now, I kept talking about equivalent amounts for eligible projects, and for green bonds, you saw in the slide that I showed you about the first green bond, the different photos. There's basically a list of type of projects that are supported, that are described in the principles. I talked about the history a little bit. For social bonds, there's a different list of eligible type of projects that specifically support social activities. Now, we mentioned early on that our World Bank goals are social goals, but climate is so important, which is why we support those green eligible projects. But you'll see here that many things like clean drinking water, that could also be supported through a green labeled bond, or sanitation, because it also affects climate or the projects are affected by climate. And so sustainability bonds basically support, in terms of their label, green and social projects. That's it for the label bond market. A little bit more to our holistic approach. We use the Sustainable Development Goals to help frame our conversations with investors. And here are some examples of themes that we've used for bonds as we engage and speak to investors. And the discussions are really interesting, very diverse, and it helps us explain how the World Bank operates as I said, a kind of like a sustainable platform for investors, where we channel the funds towards sustainable projects in developing or emerging market countries. And we have an impact report that I passed on to Stephen. I think he's passed it on to you, that shows how we try to summarize the positive impact and describe that, mapping things to the Sustainable Development Goals. And we have one report that covers the use of proceeds, transparency around the green bonds, and also the rest of our balance sheet, which is over 700 projects supported by the Sustainable Development Bonds. Now we've talked about this holistic approach, and this slide here is one that I really like to explain, or I guess I have to explain it because it's confusing. We worked with the Stockholm Environment Institute on a methodology that helped show how interconnected projects are with the Sustainable Development Goals. And if you look at the graph, you can see that there's circles, they're different sizes. The closer the circles are to the middle, the more projects have metrics that are connected to that Sustainable Development Goal in our portfolio or in the sample that they were looking at. The bigger the circle, the more volume can be attributed to the metrics for that Sustainable Development Goal. So you can see, no surprise, SDG 1, which is zero poverty, is big, and also SDG 11, which is sustainable cities, because a lot of our projects support projects that help cities as they try to become more sustainable. Now, something that we were surprised at was that, for example, SDG 5 is a tiny little circle in the edge, which would mean that not many projects support gender equality, and the volume is also low, which we thought was odd because, you know, we know that gender for us is a cross-cutting theme that covers many different, different projects in different ways. Like a transportation project, you have to make sure, as I mentioned earlier, that sort of gender aspects are considered. In some countries, women don't feel safe taking public transportation, so there has to be a space where they can be and feel safe. So anyway, we looked at all the SDGs in a different way, sort of a different slice, and tried to see which SDGs were touched by which projects that had some sort of a gender connection. And then we saw, and that's the box on the right, that a lot more projects, if you look at them from that lens, had gender-specific metrics. So this just shows that if you're analyzing portfolios, which investors try to do, it's important to take different lenses, different approaches to try and understand what's being supported. Just really quickly, we have a lot of information available for investors in different reports that cover sustainability reporting, either us as a corporate or our projects. And one main message that I would like to leave you at, there's so much changing in the markets with all different regulation, different reporting standards, that really always goes towards this aspect of transparency. Some things are more difficult, I think, for investors to implement because they're very complicated. But overall, the market is really moving towards transparency. And I think I also shared a link to the blog that Scott and I wrote that really highlights this aspect of transparency. It helps understand risks and it helps understand impact, but it's important not to just focus on data, but also to use common sense to interpret it. And the labeled bond market is very important to start this thinking towards purpose and impact. But if you look at the overall bond market, which is shown in the big circle there, it is way bigger than the 2 or 3% of the labeled bond market. So it's important for investors to take a holistic approach and look at all the holdings in their portfolio, and not just sort of rely on the labels. And this is a wedding cake image that we like, that again shows how interconnected the SDGs are. And this slide here just tries to make the main point, which is that we have to look at everything and take a holistic approach and not look at green or not green, but look at everything and how it's affected by climate. So I think that's it for the slides, as we kind of thought we went over the time. And now we're in your discussion time, right?
Yeah, thank you so much, Heike, and thank you to Scott, who just had to drop off. But we really appreciate you walking us through those presentations, and to everyone on the call and who's listening, I will provide the materials again so that you can see them when I reach out. And I'm going to stop the recording here so we can go into a deeper discussion. But thank you so much, and really hope that this was really appreciated. Yeah.
All right, thank you. And I will let you discuss freely then, but Scott put his email in there, and I can share mine as well. Don't hesitate to reach out if you have questions, and thanks for your interest. We always enjoy talking to students, and we really support that you're trying to do this, trying to understand different ways, because as you know, you guys are the future, right? So it's important that we can solve all these problems, and we think that the capital markets and financial markets have an important role to play.
Thank you very, very, very much. We really appreciate it.
Thanks. There's
Thank you
my
very much.
email address. Okay, bye guys.